Today, we unveiled CNBC's 11th annual Disruptor 50 list. And though some parts of the startup world are struggling, Julia Boorstin is live in San Francisco with a look at which sectors are thriving.
So, John, it has been a tough market for private companies. Overall, VC spending has declined meaningfully over the past year, and we haven't seen an IPO from a Disruptor 50 company since April of 2020. But there are some key areas that are thriving. No surprise that AI is a big trend. And another key recession-resistant space is climate tech and green energy. The number of companies with a climate focus or environmental impact more than doubled from 7 companies on last year's list to 16 on this year's list, ranging from logistics with the likes of Flexport and Flock Freight to ag tech disruptors like Monarch and Be Hero. And then, of course, there are the green energy companies, including London-based Octopus Energy. Now, while venture investment in climate tech declined by 2% last year to $13.8 billion, that space has been far more stable than the broader startup space. Overall, VC spending last year declined by 35%. Meanwhile, government spending on climate tech is set to more than triple to $500 billion over the next 10 years, according to PwC. This is driven by legislation such as the Inflation Reduction Act. Now, Climeworks, which is new to this year's list, raised a $650 million funding round last year. That's the largest investment ever into a carbon removal startup, despite a 2% dip into carbon and emissions tech startups overall.